Hi guys, welcome to my channel, Trading Stock Lakshmi India. I always believe in one fundamental, not investing in the company. Rather, I would prefer investing in a business model. That's what earns me profit. That's what gains me the return to my money, what I've invested. It's the same in everybody. That's the reason why the rich is getting richer and the poor is getting poorer. Retail investors are the maximum, are the highest number of people who are losing money on daily basis. But not everybody tells you how the retail investors are losing money. My suggestion is go by the business model. That's the reason I just thought of making a tagline to my channel, not to invest in the company, rather invest in the business model. Let's go ahead and see today, what is the business model that I'm talking about? What exactly is this? I'll be discussing about a sector wherein it has a monopoly business. My theme for today will be a monopoly business. I've picked top four stocks which are having monopoly in India. So don't you think that having a monopoly stock into your portfolio would definitely add value? Let's go ahead and see how these stocks performed over the years and how it has returned profits to its investors. Please subscribe to my channel before we go ahead so that you get the latest information and the business models even in the future about the stocks or the portfolio that you want to have. So let's go ahead and see what I'm talking about. The first company that I would talk about today would be Irctc. So this particular stock does not need an introduction. It's not necessary for me to give you any brief like what exactly Irctc does. Everybody knows about it. So I'll just go on the brief on short information on how to pick a stock, on how to decide on their business model. So everybody knows that Irctc is a single monopoly railway business in India. So they have the complete control over booking tickets. Either they can go ahead booking the tickets online or offline, but it's their monopoly. The market share of Irctc, there's no competitor to Irctc basically. That's what it is, right? So everybody knows about it. So the current market price that we are trading it at is 4,600. So down the lane, I had one of my friend who had few of his stocks at 800 rupees. He had 40 shares at the time of IPO. And just look at it. Today, the price is 4,600. Just imagine the portfolio that he might be having right now. Because he's made the right decision to keep the IPO that was launched, to retain those IPO, because this stock was a monopoly. He did not invest in a company. Rather, he invested in the business model. The business model theme for him was being a monopolistic company, right? This company has a very good, let's go ahead and see some of the financials. So the market cap of Irctc is around 200 crores. So, and let's see the PE ratio. It's at 249.87. So it's already at pretty high PE ratio, but this is TTM PE, which is the turnaround for 12 months. So that's high, but I would say any company that's monopoly, that's having a monopoly portfolio, so that's pretty much it. It should have a higher PE, right? So let's go ahead and see how it has performed over the years. Let me just check on that part. So from 2017, it was progressing well. So like 2018, the little dip in 2018, and in 2019, it made a rise again, 1870 crores. But after 2019, we saw COVID, but still in 2020, we saw a rise rather than declining, which was 2275 crores. But in 21, so there was a dip because of the complete lockdown, what we faced post 2020, right? So there was a dip in the financials and the net profits. So you can see gradually there is a gradual increase in the net profits as well year on year basis. But in 21, we had dip, which is 189 crores. And then let's go ahead and check the debt to equity ratio. This is one company which I've seen very few of the companies which has zero debt. So that's really a good performance by this. Let's go ahead and see what the return on equity it is. So the ROE has declined gradually, but when we look at the ROE, like in 2021, it's dipped drastically. It's 12.94%. So that's a very high dip in the ROE. But looking at the current situation of IRCTC, IRCTC is doing well. They're trying to expand themselves, trying to get themselves into different core areas. They're also trying to get into the shipping business, cruise business. So that's a positive aspect that IRCTC is looking. And also everybody knows, we are aware that October 29th is the split date of IRCTC, wherein they're issuing 1:5 shares. So that's like, if you're just an example, if you have one share, you would get 5 shares in equivalent to that. So the value of the share wouldn't be changed. So you would not lose any money, or not to be scared for that. But even after the split, is it the right time to buy? So I would, rather than saying yes, I would rather say, like, you consider, you have a look at the ratios, what we are talking about. So, and then you can make a decision, because sabki suno, apna man ka karo. Listen to everybody. Nobody will tell you, like, I mean, everybody tells you, like, go for this, go for this. But when the loss occurs, nobody comes to you. At the end of the day, it's your money. At the end of the day, it's your situation that you're facing, right? So let's go ahead and see. I just wanted to tell about the beta. So this is for the short-term traders. So if the beta of the company is lesser than 1, then the company is not very volatile. But if it's more than 1, then the volatility increases, which means that the risk increases. When you're doing a short-term trading, always check that is the beta level, because this is really important for the short-term traders. But for the long term, you got to see the fundamentals. You got to see the business model. You got to see, like, what the latest news you have about the company, right? So that's it as of now for IRCTC. But let's go ahead and continue with the second company that I'm talking about. So let's see which is the second monopolistic company that we are talking about. Please keep watching the video. Don't push forward, because you would miss some relevant information that I might be talking about, and you would not be informed about that. So the next company that I'm talking about is CDSL. What is CDSL? What does this company do? This is the Central Depository Services Limited, where your trade, like all the stocks, bonds, ETFs, the mutual funds, government securities, treasury bills, and so on. All these things they keep the track of all these holdings and the transactions. This is a centralized, it's in a centralized depository, like you have a digital locker wherein you can store all your documents. So this is the same concept that CDSL performs. There are two agencies basically in India, NSDL and the CDSL, but CDSL is well known and they have the highest market share. Just look at here. So the CDSL has a market share of 59%, which is really high, right? So when you compare it to NSDL, why is that? Why are they higher, on the higher side? Because CDSL has the much lower transaction charges when compared to the NSDL. So that's different. That's the differentiation what CDSL has over NSDL. So that's the reason why a lot of brokers, a lot of traders, they prefer CDSL over NSDL. When we look at the ROE over the years, okay, so just look at, I mean, the ROE in three-year ROE of 14% and healthy ROC they have of 20.18%. So that's a good performance by the firm. And the stock also delivered 293% in a year. So that's like almost 3 times your money. You've invested 100 rupees, you get 300. So that's pretty good. And when we look at 6 months ratio, it's 172%, and the a month's ratio, it is 35%. And so that's a pretty good one, that what CDSL is giving it to its investor. So currently it's at 1,293 that's the current market price that it's trending on. So I would rather not say about the strengths, weaknesses, opportunities. Like you can definitely go ahead and check on Money Control, and there are multiple Financial Times, all the there are many other apps which give you the information about the strengths of the company, weaknesses, opportunities, and threats. But today, this video is particularly about the business model, on how monopolistic the businesses are and how they're performing. So let's talk about the market cap. The market cap of this CDSL is 13,570 crores. So that's like under the, I mean, that's decent enough, but still it's progressing over the years. Look at the beta for the short time traders. So it's 0.69. So the volatility is lesser here. So the P ratio of this company is 62. So that's decent enough for a monopoly company. So it's your call at the end of the day. I wouldn't say like, go for this share, go for that share, but just remember why the rich is getting richer, why the poor is getting poorer. This is the basic concept, why the retail investors are losing money in the share market. So this is the reason. Just look at this performance revenue from 2017. It has the very fine, gradual upward movement in the revenue. In 2021, they made 343 crores profit. So that's a good one. And let's look at the net profit, what they've earned. Just look at here, even the net profit shows an increment here, but just in 2020, they had a slight dip of about 8 crores here when compared to the 19. And in 2021, they almost doubled. So that's pretty good there. Let's go ahead and see debt to equity. So this is the second company. So this is what I'm talking about when I'm talking about monopoly. So this is what the companies are built on, the strong fundamentals, the strong financials. So why do you think the company all of a sudden the stock price is like skyrocketed, and all of a sudden they fall? Because they end up paying at the end of the day if the business model is not good, at the end of the day if the competitors are too many, so and they're not making good sales, they lose the money. How do they lose? The mismanagement of the funds, the cash flow reduces. So there are many fundamentals which we need to see. So, and they end up paying high interest over the earnings. So, and the operating costs are declining day by day, year by year. So these are the few things that we got to check at the end of the day. So it's your call. Like I said, I'm not going to suggest here anything, but you got to take call. And the next company that we're looking at is CAMS. Just give me a minute. I'm having a sip of water. Sorry for that. So what CAMS does here? This is similarly like the CDSL. It's called as Computer Age Management Services. It assists the mutual funds to maintain the report maintenance, data administration, registration, and the transfer of the agent services. CAMS has a market share of 70%. So that's huge. Almost 1/3, I mean, 2/3 of the market they have captured, more than the 2/3. In the last 5 years, the mutual fund business has grown drastically, has seen a tremendous increment in the mutual fund business in the last couple of years. So even the top, I mean, this particular CAMS has top 5 mutual funds organizations which are registered with them. So they are the clients for the particular CAMS. And the distinct advantage of this particular CAMS is the entry barrier to this market is quite high. But once you get in, it's very difficult to get out as well. So that's the reason even the companies stick on to CAMS and they continue going ahead. And moreover, they've acquired 70% of the market share. So that's a very fantastic performance. Let's go ahead and see how it has performed over a year. In a year, it has given 133% hike. So that's a decent one. And when we look at the 6 months, 82.3 in 6 months and 17% in a month. So let's go ahead and see a couple of financial details, what we have here for the CAMS. And you can take a call depending on this particular video. Please don't forward the video. Like I said, if you forward, you're going to miss out some important facts that I will be telling you. So the market cap for this is 15,000 crores, 15,151 crores. And again, the beta, being a monopolistic company, the volatility which I was talking for the short-term traders, it's at 0.43. So that's pretty good one. And coming to the part of P ratio, so it's at 56.83. So that's good enough. And let's go ahead and see some financials. The total revenue, like I said, so it's increasing gradually, but in 2020, there was a dip. It picked the pace in 2021 again at 673 crores. Coming to the net profit, so there's a beautiful graph that's going on an upward ladder. So there's not like very extremely high skyrocketed graph that we can see here. So a gradual increase slowly and stay on a steady pace, but there is an improvement. The company has definitely showed that. So, and let's look at the ROE ratio as well. So ROE ratio is gradually increasing. The return on the equity is also increasing to the shareholders. So investing in companies like this, the shareholders would not have to worry about. You can just relax while you're invested into such companies. The next company that I'm talking about will be the Indian Energy Exchange. What exactly is this? This is one of the company wherein the electricity, all right, so the major electricity produced in the country, it's a kind of online e-commerce website or online marketplace where buyers and sellers of electricity meet each other. They can exchange the electricity here. So, and the demand for the electricity, looking at the EV infrastructure in India post the pandemic, it's rising to an exponential form. It's rising day by day. We are seeing the EV infrastructure, like many other companies coming up, Tata Power being one, even Adani is working towards it. Reliance might come up with the things. So there are many companies which are trying to implement the EV infrastructure. So when we have the EV infrastructure, they obviously need the electricity to charge them, right? So how will the EV infrastructure be formed? So these are the things that the companies, the fundamentals will come across, and the business model will come across. Also looking at the stock delivery over the year, it's 145%. And in 6 months, it's at 74%. And in a month, it has given 13% increment. So just imagine, guys, when you invest in such companies, which has a strong fundamentals and the unique business model, so obviously you earn good there, right? Because 13% in a month, just imagine if you have invested just about 10,000 rupees and you get 13%, and so that's close to 1,300 rupees. So that's a pretty decent enough. So don't have a greed when you're trading. Never go for the greed. Greed is the one that kills the retail investors. That's where the retail investors are failing to understand the stock exchange, because nobody can predict the market on how it is performing, but it can be impacted by big bulls when they're working on it, right? So please be aware of that. Don't just go by the news articles. Just don't go by the latest updates that you have about the company. Not just that one particular thing, but are you aware of what exactly the things are happening in the stock markets business in that particular company? How the financials are going on? Are there any legal issues that are going on? Are there any financial crises that they are facing? Please have a track of that, because it's always good to recheck when you're doing that, right? So yeah, the coming to the part of the current market price, it's at 630 rupees. So some of the financials here, just give me a minute. I'm sorry for that. Coming to the part of financials for IEX, so revenue, so over 3 years from 2019, so there is a gradual increase, a slow pace, but in 2021 they made a better performance, like almost 317 crores. So coming to the net profit, so look at the difference in the margin of how they're performing over the years. So it's a beautiful graph that's going upward movement. So the stability shows that their year-on-year basis. Even when we look at ROE, it was dipped in 2021, So not an issue, but it will pick up, because when these monopoly business, they definitely, because looking at the business model, so there should be a better graph that we can see in ROE down the lane. Looking at the debt to equity ratio, so it's again 0 here. So that's a safe option to bet on. And to the short-term traders, I just wanted to show here the beta, which is 0 at 0.53, the volatility, so which is again lesser, and the TTM-PE ratio, which is 83.34, pretty high, but it's your call. Like I already told you, it's a monopoly business that this company is taking a more than 70% of the market share, right? So you can take a call on that. And even the market cap for this particular company is around 18,899 crores. So that's decent enough. And yeah, so I'm done with the calls here. I mean, I'm done with the video for today. But at the end of the day, I just wanted to give one more suggestion, that please don't invest just looking at the articles that you get. Not just the articles, but go by, just reimagine yourself what the government is working on. Just think once, what are government plans for the next 5 years? Try to concentrate yourself towards such companies, or try to divert your companies, but not just like which are the major good performing companies randomly without checking the finance. Don't go for it. Why are you making such a mistake? It's your money, right? At the end of the day, why do you want to lose any money out there? So always be cautious in that, and safe investing. Take care, guys. So please don't forget to hit subscribe button there, because in case if you want to get the latest updates with regards to the channel, or any other updates on other stocks, you can always come back to us, and you can always paste your comments in the comment section below, and I would be happy to answer them as well. So it was really nice talking to you guys, and take care. Safe trading again. So